moving on, we now have another guest who's joining us. Abneesh Roy, who's the Executive Director of Nuvama Institutional Equity, is now joining us to give us some color on the paint business. Hi, thank you so much for taking the time out, Abneesh, and joining us. Good afternoon to you.
Good afternoon.
Abneesh, let's look at the paint industry as a whole. You know, there is escalating competition. The pricing power has gone down, and there is a certain uncertain market share outcomes that's really playing out. Now, while the consensus is on, this on the sell side on the growth and the ratings, is the potential for derating on the paint stocks over yet, or do you believe that the derating is yet to play out?
Yeah, thank you for the question. In our view, the derating is over, and there are 3-4 reasons for this. One is, of course, from a demand perspective, as the previous guest also highlighted, Anirudh highlighted, the discretionary consumption should start reviving. And even for Berger Paint, which is our topic in the paint space, we expect almost high single-digit volume growth, and revenue growth also should be fairly close to that. Because clearly we have seen this year the benefit of good monsoon will be there. The tax cut for the salaried class, the taxpayers is there. And of course, interest rate cuts are happening. Food inflation has cooled down. Plus the base effect will also help. So our sense is in early Diwali will be there. So this time in Q2, we expect good numbers for the paint companies and especially for Berger Paints because of all these 4-5 reasons. Second is from a competition perspective, frankly speaking, the new competition is there. But in our view, the competition is now between JSW, Kansai, and Birla Opus for the number 3 slot. In our view, Berger Paint, which is a good number 2, will do quite well. Asian Paint, which is the strong number 1, unfortunately, currently because of the urban slowdown in the big city, there is a weaker number versus Berger Paint. At some stage, it should course correct, but our sense is this will take maybe 2 more quarters. So till then, we'll have a preference for Berger Paints. The third reason is clearly crude oil and titanium dioxide. No reason really to worry. So from a raw material side, gross margin expansion we do expect. And our sense is for most of the paint companies, gross profit should grow faster than the revenue growth. A&P spends could be a bit high. But yeah, the derating exercise is over because now clearly the secondary sales for the new companies, paint companies, will be a key question mark. First year, yes, Birla Opus has done well, but a lot of it is also the sales which happens to the dealer. That is the primary sales. The real test comes in the second and third year, and there we have seen a CCI, the media report saying that Birla Opus has filed a CCI complaint against Asian Paint. In the past, we have seen that these are very difficult to prove. And this again shows that the entry barrier in paint is quite high. That there is a entry barrier in favor of the incumbents, and that's why we feel that 3-4 years down the line, the market share loss for Asian and Berger will be minimal. Most of the market share will get redistributed between Kansai, Axo, JSW, and Birla Opus. Whoever does better, they will gain. But we remain positive on Berger Paints. Asian Paint, 2 more quarters of wait and watch is there.
All right. Hi, Abneesh. This is Shrishti also joining in. So very interesting data points that you have just highlighted, Abneesh, but also on the market share. Give us some more color on that because Birla Opus, like you have been mentioning, they have been gaining market share. On the back of that, today we see even Grasim is doing well. But what exactly is making Birla Opus disrupt the market? And because what we believe is that they are cutting prices and now taking over the market share. Do you believe these price cuts are sustainable? And what's your overall take on the margins as well for the paint industry?
Yeah, first question on the paint margins, we don't see much of an issue. Even if you see the guidance which Asian Paint has given, they have given 18 to 20% EBITDA margin guidance for FY26, which is better than FY25. That itself shows that the incumbents' confidence is there. Yes, crude oil has corrected, titanium dioxide is soft, but that is soft even for the new players. So the confidence of improving margins is clearly a demonstration that yes, this industry, the entry barriers are high. Now, coming to market share, frankly speaking, no authentic numbers of secondary sales of the new players is there. Some of the data points suggest that in FY25, the new player has done around 2200 crore revenue. Please again note, this is most of the primary sales, right? Second, of course, is in paint, what we have seen, disruption is very difficult. You mentioned lower prices, etc. Yes, there is a 10% extra grammage, etc. But in our channel checks, what we are getting is most of the traction for the new player is in the lower end. See, paint is a consumption which a customer does in once in 5 years, 6 years, right? There, you would not like to save money on 40% of the total cost. 60% of the paint is manpower cost. So if you save a bit of money on the 40%, you're not going to really save too much, given you are taking a risk from a 5 to 6 years. And if you see, Asian Paint has responded now with a 4-year warranty, right? So clearly, Asian Paint has also increased aggression in the lower end. Berger is also very aggressive. So in our view, these are initial days. We see that number 3 slot is where the fight will happen. I don't think we have to see much of disruption in paint, because in terms of technology or product, or even in e-commerce, or in terms of white space, I don't think too much of strategy is available for a new player to record that. And that's why now we are seeing that, yes, CCI complaint and all those are happening. Yes, Birla Opus has done better than initial expectation, but now second and third year will be the better test in terms of where the real sales to the customer is happening, which is the secondary sales. So we don't see much of disruption by any new player. Now we'll see how JSW, Axo, that acquisition, if at all that fully comes out, how they will impact the market. But again, we see that from a MNC player, Axo shifts to a domestic player. So again, that is more of a shift of hand rather than any big change. So we are positive on the sector, but currently we'll have a preference for Berger Paints.
Right, Abneesh, you mentioned that perhaps the competitive intensity is now ebbing away. It has already been played out. But talk to us about the general volume growth pickup, because the demand has been very sluggish as far as the paint business is concerned. Going ahead, do you see it grow in terms of volume growth? And what about the impact on the margins, because they have also been at the receiving end of a slowdown in the demand?
Yeah, so in terms of EBITDA margin, if you see, most of the paint companies have already given the kind of outlook for FY26, and they expect the margins to improve. So see, gross margin improvement will be there, right? But Asian Paint has said that the FY25 EBITDA margin, which was say around 17%, against that they have given a guidance of 18 to 20% at the EBITDA margin level. So they have given an improvement. Even Berger and Indigo, we expect an improvement. Now, second is from a overall volume growth. In Berger, we expect around 8 to 9% volume growth in FY26. Even for Asian Paint, we expect around 4-5% volume growth. So Asian Paint is lower because in the big cities, Asian Paint has almost 70 to 80% market share, right? Even if you see FMCG companies where there is no Birla Opus kind of a threat, if you see Colgate, no volume growth, Dabur, negative volumes, HUL, very limited volume growth. So this is more of a consumption slowdown, which is there across every segment, frankly speaking, which is the real concern, urban slowdown, but not too much of an impact on the new players. Yeah, new players, frankly speaking, this is more of primary sales, and they have done good distribution network. But now the real impact is of the urban slowdown rather than this. But as I said, Asian Paint, we expect 4-5% volume growth in FY26, and even for Berger, high single digit, because they have more presence in the smaller towns. Berger is gaining market share in the big cities by expanding its feet on street by 10%. So that is how we see in terms of volume outlook and margin outlook for FY26.
All right, Abneesh, now let me just divert a bit from the paint sector. Since we have you with us, why not deep dive into other consumption themes? And I just wanted to touch upon Diageo PLC's recent report suggesting that the parent of United Spirits, rather, is considering options for its ownership of IPL cricket franchisee, that is RCB, the recent winners, and they're looking to actually go ahead and make a stake sale in that. What's your read through with this particular news, and how big a game changer it can be for United Spirits?
So we have a buy on United Spirits with a target price of 1885. Yes, if this value unlock happens in the IPL team, either full exit or partial exit, I think the stock will re-rate. In our view, there could be, say, around 90 rupees kind of a re-rating if this news is true. Currently, this is more of a media speculation. In the past, Diageo and United Spirits have not said that they want to do this. So we'll wait for a formal clarification there. But irrespective of IPL, if you see in the 1885 rupee target price, our allocation to the IPL team is not very high. Our allocation is just 146 rupee based on reverse SOTP calculation. Currently, we don't do SOTP calculation for United Spirits IPL team. We value console entity at 60 times P multiple. But if you do the reverse calculation, it comes out to 146 rupee allocation out of 1885. So it is not a great needle mover. But if we take the media article, etc., the value comes to more like a 234 rupees. So there could be around 90 rupee more upside if the deal happens. So currently more of a conjecture. On the fundamental side, clearly in UP, we have seen the number of retail outlets increase. Secondly, we have seen even in Andhra, obviously for all players, it's good news because market has opened up. Even in Karnataka, the taxes on the premium spirits has been reduced. FY27, we expect benefits from the UK FTA. Two benefits. One will be the volume growth in the premium end will go up because of affordability factor. We expect that the premium Scotch, whiskey, etc., the prices could correct almost 9-10%. Second benefit will be the raw material of Scotch, which is used. There we could see savings, and that will lead to margin expansion. So we remain quite positive on United Spirits, but this IPL news, if it is true, there will be further value unlock, and that will be a positive for the company.
All right, Abneesh, thank you so much for taking the time out and joining us with your view. We will let you go on that note, and with that, it's time for a quick breather on Markets at Noon. But don't go anywhere. After the break, we're